Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for a very active day on February 15th, 2022. Let's start by looking at the volume profile. What is the volume profile? If we turn a distribution, again, like a normal bell curve, this is one standard deviation, that's two standard deviations outside. Long story short, if you tilt that over and we have a volume profile that creates a similar distribution. And the midpoint right here is our target. And that at the moment is 45, we'll put it 4500. It's a key level to watch on the S&P. Now, quickly saying for the short-term trades, when the market is above, or is above the mean, above that standard deviation, or in this case, the yellow, that's about one standard deviation, and just on the profile, that sets up the shorts or the bear type of positions to go get the mean, which is mean reversion. And if we find ourselves under, beneath, or at those lower bounds, that sets up a long to go get back inside the profile. That is a simple way to explain something a lot more complicated, but that just put it in those terms. The market was under the value area extreme and pulled from 4380 potentially back to the midpoint. This is a bullish type of outcome for the S&P. It happened also in the NASDAQ. And just updating levels, roughly 14,200, pulling up to that middle, just about 14,700. And that again is the NASDAQ. In the Dow mini futures, back inside the profile from beneath, and the Russell is the odd market out. The odd market out meaning it's above the profile. And that's just something to watch. That's 2060. The other side of the equation is not the equity market, is crude oil. And crude oil, seen here by the futures contract, with the profile, again, probability distribution, that's all, making the midpoint about $91 per barrel. All things being equal, the most recent play was down. Mean reversion. All the headlines, all the risk, all the things that we're watching on the Federal Reserve and their potential to raise rates before their March meeting. And of course, Ukraine and Russia, just to name a few of the major headlines happening this week. Just looking at top-level approaches, the equity market is still in the middle of the middle. Now think about distributions, think about these levels. We had a video update last week on the middle of the middle, and we're not that much far removed from where we were. And that was over here last week. So we're still in the middle of the middle. On the NASDAQ, we're still weak. And that is a little bit beneath the middle of that distribution. There's a little clearer perspective, and the Dow is right back to the middle. The one that's a little bit odder than the NASDAQ is the Russell, and it is well beneath the middle of its, and we'll pull this to a different perspective, longer term sideways trading range or volatility box. The Russell's level to watch is about 2100, and that's a lower bound. A similar stock with this play is Amazon. So there is a similar sideways volatility box, and just to underscore the point, we can think about Amazon as also being in a distribution. Just know that the bell curve, or at least mean reversion, takes price when it's beneath it, tends to rotate it back to the middle. And these are short-term. Again, the videos here in TheoTrade are just talking short-term plays and short-term things to watch. So to me, Amazon and the Russell are best defined, in statistics at least, by a bell curve. And no, prices do not follow normal distributions. But it's the best approximation that we have without getting too complex, and again, keeping it simple. Outside of the equity market and crude oil does continue to have this uptrend and stronger play, and higher highs and higher lows. And the contract at the moment trades above 95, or did as of yesterday, 95 per barrel, just shy of that 100. And that's a play we can see off on the weekly chart. Over here, we'll see the weekly chart of crude, which took it up above the highs. Gold, not to be outdone, is in a trading range. Remember the theme here, for me at least, is middle of the middle. And for gold, if you're trading gold. That includes GLD for the ETF. The middle of the middle is just above 1800 for gold. That is forming a very narrow trading range. So that's your key levels for short-term trades. We can see that on the daily chart as well on gold. Daily chart is right here. So that was an initial pierce above, and I have to do it. The bell curve distribution takes it potentially back inside. Mean reversion. Outside of the major indices, we still have the bond market that is weak, and that's under the context about the Fed raising rates and the specter, no longer a specter, the reality, and the accepted, I'll put it as the accepted reality across the board for inflation, and the need to combat inflation with higher interest rates. And that is putting pressure under the bond market in general. In fact, the bond market just made, in this case, TLT, made a new low not seen since about a year ago. And that was into March of 2021. ZN is well beneath. Remember, the bond TLT is a tradable ETF. ZN is the 10-year Treasury note, and that is again pushing lows not seen. We'll update the chart and see how far it has been since the last time we were at these levels. And that takes us back even further than this. Let's see 3 years. On the bond market, takes us back to lows not seen since the earlier part of 2020, and that was right before the economic shutdown. And we're back to those levels. On ZB, we have a similar, not quite perfect, but similar logic. Now, ZB is the 30-year Treasury bond, and it did hit lows in 2021, earlier part of it, but now that takes us back, again being very precise, to the 150 level, and that was last seen similarly to where we saw ZN. Again, TLT is different. It is a tradable ETF. But outside of those, and the yield, just to be quickly on the yield, that is TNX is our 10-year Treasury yield, and that is above the 20 level. 20 just means 2%. So Treasury yields are on the rise, bond prices are on the decline, and that will affect the different sectors in the market a little bit differently. Financials and technology, just to name the two that will be most affected. Speaking of technology, in today's session, here in the 15th of February, we look at a scan of which stocks were strongest on the day. NVIDIA was the strongest stock in the S&P 100, also in the NASDAQ. It is pushing up higher and pushing above a declining trendline channel, and that is roughly about 265. Similar to the mean reversion, that mean is declining. It's about 230 at the moment, or 238, 235. So for NVIDIA shares, if this does push above 265, that opens up a quick pathway a little bit higher. Tesla is in motion again. Second highest gaining stock. It's up about 5% in today's session, and it's only coming up off the lows, and that lows were about 850. Not seen since a couple of other support shelf bounces at that key level. The key level is about 850 per share. Just to underscore, we look back on the chart and see prior support and resistance. It was resistance here. It has become support in this period. So we will be watching this, roughly speaking, 850 and anything above 900 for Tesla shares. Keeping the technology stocks in play, Qualcomm is the third leading stock on today's session. Not very much different, having bounced off support at about 161. Just for a quick note, which stocks were weakest? Might not be surprising that they were energy names. Energy stocks being ConocoPhillips, which came down off the high. It is tied in large part to crude oil, not directly, but closely. And that is getting a pullback. Southern Company, and that is just in a trading range. And then ExxonMobil. Just quickly looking at some of the energy names and the energy sector XLE ETF, that is pulling down off those highs. Again, it will be tracked similarly to crude oil. And before we go, which stocks in the S&P 500 made new 52-week highs? Are there any interesting names? AbbVie Labs, Philip Morris, Marriott, Expedia, and a few others on the lower market cap scale. How about stocks that made new 52-week lows? I'll put this in. Fidelity, and not a lot of companies with large market cap. These are stocks in the S&P 500. To be clear, 4 stocks made new 52-week lows, and 6 stocks made new highs. Quickly looking at how the market is playing out, which stocks are above the market, which are beneath. But the general market itself will end with the SPX. It's a long-term play. It is stalling. It is forming a lengthy, at least at this point, sideways trading range. And the middle of the middle is about 4500, lower bound about 4300, and a quick, easy reference, 4700, more like 47 and 50. Keep these levels in mind as we play through all these headlines, the volatility, and of course the risk that comes from headlines and the Fed, Ukraine, and other economic headlines. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for February 15th, 2022.